First up, the new kid on the block, Matt, and that would be Warner Brothers Discovery. A handful of firms putting out bullish notes on this outfit on its first day of trading post-merger. Evercore ISI and Atlantic Equities both upgrading it to buy, while Deutsche Bank named it top media pick. Shares turning lower, though, after starting the session higher. You are mixed on this one. You think it's shaken, not stirred, I guess.
That's right, Tyler. I think that, well, actually, what I think is it's more of it's going to be a better play later in the year. The bad news is that we're coming out. One of the big things that everybody's focused on, of course, is streaming. People, we hear all this pent up demand, but the pent up demand isn't for streaming. It's to go on cruises and go on vacations. And so people are going to be focused less on that. And, one of their key things is they want to get their direct to consumer business to break even from a loss from a long time. And I think that's going to be harder to reach. However, the good news is that most of this stuff has been priced in, as it has been for Disney and some of these other names. I don't know if it's fully priced in for Disney, but more so for Warner. And I think that again, it's a cheaper stock than Disney. It's trading 14 times earnings and 6 times EBITDA. So it's something they have. The Time Traveler's Wife will be coming on in the spring. I'm sorry, in the fall, which again might be something where people are going to be more willing to watch it. So as the weather gets a little bit colder. So again, I think it's something that people. I'm not afraid that it's going to have a lot of downside here because it's already down 44%. But the upside may be a little bit more limited, I think, for the next few months.
The streamers seem to succeed based on the content they have. When you think of Apple, you think of the success of Ted Lasso. When you think of Warner Brothers and HBO Plus, you think of Succession, you think of Curb Your Enthusiasm. Where does this new company that has a lot of content, when you look at the Discovery side as well, where do they rank in terms of the streamers and fresh content?
Yeah, that's one of the problems that they face too, Tyler, is that they have, King of Game of Thrones, obviously and The Sopranos. So, two of the great shows of all time, and yet they're behind us. They'll be looking forward. I mentioned the Time Traveler's Wife. That might be something that that can pick things up for them, but they don't seem to have the same kind of quality. I don't want to say quality shows. Successions is done very well, and that's a show I certainly really like. But I do think that they're second or third, probably third in that ranking, and that makes it a little bit tougher for them. But a lot of stocks have been clobbered. They're really expensive. This one's not expensive. So I'm not worried as much about the downside as I might be for some other names.
All right. So maybe on the menu later this year. What about the flip side of the coin, which is AT&T, Matt? After shedding this asset, it gets an upgrade today. The stock is rebounding, but it's been, a decade of basically going nowhere. JP Morgan upgraded it to overweight, saying now it looks more like Verizon. Would you be a buyer?
I would be. I do like this stock. It's kind of interesting because all these things that they've announced, all they've done, was announced a long time ago, and I thought they'd get more credit for it by now. They had so much debt, and they were in so many businesses they shouldn't have been in. So the new CEO came in, really made the changes that were needed to be made, and people really don't believe in it right now. But when you get a stock that's, another thing too is that we have, I always think about people worried about a recession coming. I remember back in the early '90s when people had cell phones. They were cell phones, not handheld computers. I thought, geez, we have a recession. People are going to get rid of these things. Well, we didn't have a recession for a while, but now there's no way. People would sell their house and furniture before they get rid of their cell phone and 5G. But the real thing I like is we so much uncertainty in the market right now. This market is very, very expensive. This stock is very cheap, 6 times earnings, 6 times forward earnings, and it pays you to wait. Over 5.5% dividend yield. Here's a stock that, again, they're getting rid of some of this debt. They're focusing on their core business. Now they can hopefully finally get some upside potential, but their total return should be good, again, with that fat dividend yield during these uncertainties.